Hello, this is Alex with MasterChartsTrading.com, and this is a market recap for Friday, August 28th, 2015. Well, we had a pretty wild week on Wall Street, and I think we had another flash crash of sorts on Monday. But for the week, yet indices did finish higher. So we'll look at why that happened and look at the rebound levels to watch. The market breadth, however, is now firmly in the bearish territory. We'll look at what will it take to make them bullish again. Bonds sold off, and I still think that bonds are still long-term bullish, so we'll see if the opportunity to repurchase them at a lower price will come in the future. Gold and gold miners ran into resistance but found its footing, and the same, finally oil and XLE, the oil-related energy ETF, started a pretty strong oversold bounce. Also, a programming note: I'll be out of town all week, so unfortunately there will be no intra-week updates of charts on StockCharts.com, our public chart page there. All right, let's look at charts. So S&P 500 large cap index. Well, last week we had, I pointed this out, we had two Marubozu candles, a support break right there, and then another, continuation lower. Now, next chart I'll pull up, I'll show QQQ, which is a little more obvious than S&P 500. Than charted S&P 500, because there was some pretty wild fluctuation on Monday, and the ETFs that are traded on the stock markets, they're also traded by a lot of high-frequency trading robots. So I think that there was some sort of an event that happened, and what's weird is that the prices of the ETF itself did not, they experienced a very large percent drops, but the underlying securities that the ETFs are supposed to hold did not. So that's the weird part, is that some sort of a flash crash event did occur. It'll probably take some time for investigators to figure out what exactly happened, but I think that something did occur. So anyways, S&P 500 for now, the index did rebound from here. I did look at it as a, well, it's not exactly bearish, but it's definitely getting there. We're getting a death cross where the 50-day moving average is now moving below the 200-day moving average right there. So that's definitely not a bullish sign. Now, as far as market breadth, we're still not on a market breadth thrust for breadth momentum oscillator yet, and all of the indicators that I follow for market breadth are actually quite bearish. So this is S&P 500 new lows, new highs indicators. It hit below -30, so it's pretty bearish. The unbalanced volume hit a new low. Advanced decline line broke down. So there was a lot of negative signs. So next chart, let's look at S&P 500. Clear breakdown from a trading range here. Now, this is where it gets interesting. So this is S&P 500% of stocks above the 20-day moving average, the 50-day moving average, and the 200-day moving average. So the 200-day moving average is kind of like a long-term, and up to actually Monday, I believe, the percentage of stocks above the 200-day moving average was still above 40. But then Monday, we had a huge drop in the number of stocks above the 20 and the 50-day moving average. We basically had I think like 1% of stocks above the 20-day moving average, and a similar thing here for 50-day. So this was an extremely oversold level, and from this extremely oversold level, we got a pretty nice rally here. So yet you can see that there's still these market breadth indicators are still below the bullish threshold. So for example, for bullish percent index, I would like to see a move above the 60%, and then you know, as long as it stays above the 40%, I'm okay with it. But now it dropped below 40, and I still have not seen a move above 60. And this is actually the same true as for the 200-day moving average and the 50-day moving average. So all of them are still firmly in a bearish territory. And as I promised, I just wanted to show QQQ, and you can see that there was an enormous spike during the day, the intraday. So the index opened here at about 90, what is it, $94, but then it's within seconds it spiked down 10%. That's a very big drop for an ETF. So I still think that this is some sort of a flash crash event, and they'll probably be investigating this in the future. For the time being, you know, we're treating this level as true, and from it you can see that the rebound took place, and this is about what is it, 12%. So if you bought here, you know, you could have made just a tremendous amount of money. Very difficult to time, obviously. Next chart shows NYA, New York Stock Composite Index. Here already got a death cross, so the 60 days below the 50-day moving average is below the 200-day moving average. The advanced I actually showed the chart last week as well, and here last week I was still waiting for one more indicator to turn bearish, and that's bullish percent index for New York Stock Exchange Composite. It was still above the 40 mark, but then on Monday, after this pretty dramatic spike, we got, you know, a reading of 29 here or so. So right now all of the market breadth indicators are on the bearish side. The advanced decline line, the advanced decline volume line, the new highs, new lows indicator actually turned bearish in July. Bullish percent index, as I mentioned, and also the percent of stock above the 200-day moving average also turned bearish in July. So all of these indicators are still have not reached the bullish threshold. Plus, coupled with the fact that we got a death cross, I think caution is certainly warranted. Next, let's look at TLT. This is a good bond proxy. So, nice rally off the support here. Here I actually got closed out. I had a position open in TLT, and I got closed out because you know, this was pretty significant drop here. But I still think that TLT is long-term bullish. So if we get a correction down to, well, let's say this breakout level to 120, that will be like a normal size correction to the 50-day moving average, and at that point most likely the MACD indicator will become once again in a negative territory, and I will be looking for a re-entry opportunity on the long side. For now I think they're kind of going to correct in corrective mode. They could correct just moving sideways, or it can move down a little bit more. It's difficult to say, but point is that I'll be looking for a bullish setups and not yet looking for bearish setups for bonds. Next, let's look at gold spot price. So I mentioned last week that there is resistance here, and indeed immediately we got I think it's Monday, Tuesday, Wednesday, Thursday. So almost all of this week we had a fall in price in gold as it ran into resistance in this 1160, 1170 area. So what I am impressed is that gold managed to find support here at the 20-day moving average and actually a rebound. I was not yet comfortable shorting at this point just yet. Some shorter term traders no doubt actually went short here, and I pointed this out last week as well. For me, I wanted to see MACD a little bit more in a positive territory. It has not happened yet, so I want to see a little bit more upside before I go short on the gold again. Okay, so next chart shows GDX, and actually this one is one of the reasons why I did not feel comfortable going short gold or GDX just yet, even though we had a clear bearish engulfing here, confirmed next day, and this is a 50-day moving average, and we failed to close above the 50-day moving average here on 2 occasions and then collapsed. So the interesting thing here, I think, is this, is bullish percent index. So again, we were at 0 here, and then we got a rally. Now we are again at 0% bullish percent index, and I think we're getting a rally of the support in GDX. So unless gold completely collapses from here, I think we will see further prices going higher. Now there is now resistance here at $16.16. So if we rally from here and take out this resistance, and think the next resistance level is at 17 from this broken support, 1729, 1750 area. It's possible. I mean, if we take out this high at this resistance level and even this resistance level, maybe we can go as high as the 200-day moving average. But in any case, this is a bearish security, so I will be looking for shorting setups right now, and I'll be looking for MACD to go positive because I want to go short. For example, here you can see MACD became positive, and then it was a good time to go short around this area. This has not happened yet, as MACD is still in a negative territory, and that's why I was not comfortable at this point going short, even though this is a bearish engulfing, and some would say, oh, well, you could do it short-term trade. And if you did this short-term trade, wonderful, as long as you timed it just correctly. It's pretty difficult. But in any case, I think that once since this is one of the better indicators for gold miners, the bullish percent index is now at 0. I think that this is one of the counter trend indicators, counterintuitive. So we could get more upside, I think, in GDX. Next, let's look at crude oil, WTIC West Texas Intermediate. So a couple of weeks ago, I mentioned that I had a short that I opened actually way back in May via short SCO, and it gained SCO actually gained about almost 100%. So I put a trailing stop on it, and I got closed out. I think it was right here, and then we got another move down. So I said that at this point it was extremely oversold, as was gold as well, and everybody was just holding their breath for some kind of a snapback rally. Indeed, it materialized here on Thursday. It was a nice follow through on Friday. For now, I'm not shorting the oil, or I'm not going long because oil is bearish security, so I'll be looking for shorting setups, and I want to see MACD in a positive territory, as in, for example, here and here. This one obviously didn't work out, but this one did work out. So I'll be looking for I'll be waiting for the oil to rebound and then go short again. Now, of course, the initial levels to watch for resistance is here in the $50 area. There's a peak here, and then a $50-day moving average is here as well. The next level is around 54, broken broken support rather, and a 200-day moving average. So there are still some. I think there's upside right now to the oil, and there's two obvious resistance levels. And of course, next one is around $60. I don't know if it'll make it that high though. And then finally, XLE, what do you call it? The energy select sector XPDR. Pretty much same. Well, it's interesting because last week I think that the reason why I put a trailing stop on my short in oil is because I saw some upside in XLE, and I thought, maybe XLE is leading the oil higher, and this clearly did not happen, and then it just collapsed right down and actually made a multi-year low. But now that we see a pretty strong rebound in oil, and then there's this gap up right there from here to here, this is a better looking, if you're picking bottoms, then this is a better looking entry here. And the same as with gold miners, we do have market breadth data for energy ETF, and the same thing, it was at 0. So bullish percent index was at 0. So it's one of the better indicators, I think, if you're trying to find the bottom. Since there's not that many stocks in XLE, it actually occasionally happens that XLE becomes extremely oversold or overbought, and you have readings of, let's say, 0 on the bullish percent index. And then indeed this is what happened, and we see a rebound in bullish percent index and the rebound in XLE itself. So that's it for this week's recap. I just wanted to show you how to find us on the internet real quick. Please go to MasterChartsTrading.com. We have a blog there where this information will be published, video sections, and a public information, public charts and social page. You can follow along on the public charts page, and we post this information there as well. Sign up for our mailing list. We're gonna have a trade alert services starting hopefully around October 1st, possibly early. So please sign up for our mailing list. That's it for this week. Thanks for watching, and have another great trading week. Bye-bye.